Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. By the way, Happy New Year, John.
Happy New Year to you too, Jim.
Resource Juniors suffered a poor finish for 2016 after a strong run from late January until mid-August when gold peaked. With the arrival of the new year, many juniors have rebounded smartly along with the recent jump in the price of gold. But one of your spec value hunter recommendations, Midas Gold Corp, jumped during the last week of December, 2 weeks after the U.S. Forest Service approved its plan of restoration and operation for the Stibnite mine in Idaho. In fact, the stock dropped 30% right after the permitting news, possibly because this approval merely kicks off the permitting cycle. Is Midas Gold just an optionality play on gold, or is Stibnite also a Discovery Watch candidate?
Well, Midas Gold completed a pre-feasibility study for the Stibnite project in December 2014, which envisioned an open-pit mine, 20,000 tons per day, with a 12-year mine life, which would produce about 300,000 ounces per year, and over the life of the mine, about 100 million pounds of antimony. However, at $1,200 gold, this project, although it has a positive net present value, the net present value is well below the $1 billion capex. And a rule in the industry is that the capex, the cost for developing the project, needs to be equal or lower than the present value of the production that is expected from this mine. So in this sense, the Stibnite project is an optionality play, which if gold gets to $1,600 will definitely be in the money and be worth developing. Now, it is in the permitting cycle which in the United States can take 8 to 10 years. In this case here, they think they can get it done in about 3 years. And this development that happened in mid-December, it was the Forest Service approving a plan for restoring the project, the site project, enabling this river that is blocked by the old mining works to be opened up again to allow salmon to go back upstream into the valley that's above it, all part of putting this gold mine into production. And Stephen Quinn, the CEO, calls this a reclamation project with a gold mine attached. In fact, the gold mine funding it. So the hope is that this project will end up making it through the permitting cycle and becoming a major gold mine, one of the newer ones in the United States down the road.
The antimony byproduct represents only a fraction of the potential revenue from the Stibnite mine. Why is the antimony byproduct of strategic importance for the United States, and is it of any strategic importance to Midas Gold itself?
Well, the Stibnite mine was put into production in the late 30s, early 40s to fund the American war effort. It produced antimony and tungsten. And at the time, they didn't really care much about the environment. They needed antimony, which is a flame retardant and is also used in lead acid batteries. And of course, tungsten is a hardening metal used for weapons. So they made a mess of that area. It was later on mined for gold in the 50s when it was, an additional mess was made. But the antimony, it's really important today. There is no antimony production in the United States. Of the 156,000 tons produced in 2015, 77% comes from China, and of that, most of it comes from one large depleting antimony mine. The rest comes from a variety of smaller mines with small refiners and smelters processing the antimony. Many of them very, very polluting. Antimony. The world antimony supply is a critical vulnerability for end users all over the place. So if we end up with a situation where Trump says, okay, we're going to adopt protectionist measures and we're going to force all these manufacturers to relocate their businesses to the United States, they will end up with an interesting problem because China supplies the antimony that goes into a lot of these products that are manufactured in China and then imported and sold in the United States. if Trump launches a trade war with China and China loses this export market, it is highly unlikely that it's going to ship its antimony to the United States so that the American manufacturers can make those products that require antimony as an input. So there is this significant potential supply problem for antimony. And of course, with China and its activities in the South China Sea, its possibility of annexing Taiwan and finally making it a formal part of China rather than this breakaway nation. Should this type of envelope be pushed by China during the Trump regime, we could see a serious antimony supply problem, not just for the United States, but for the world all over. So from an American perspective, having an antimony, domestic antimony supply is of very strategic significance. It becomes of significance to Midas because its primary metal that it will produce from stibnite is gold. And the world doesn't need any more gold. There's 6 billion ounces already sitting in vaults and hanging around people's necks and wrists and so on, doing absolutely nothing. So it's easy for the anti-mining lobby to oppose the development of yet another gold mine in America's backyard. But if all the other things that the anti-mining lobby consumes, its clothing and so on, if all of a sudden that's suddenly not available or very expensive, then the attitude changes. And as I mentioned earlier, this really is a mine reclamation project with a gold mine attached. So if antimony becomes a security of supply topic, I would expect that the permitting cycle will be fast-tracked. And this is important for Midas Gold because with $1 billion capex, it's obviously not going to build this mine itself. It's doing the tedious task of pushing it through the permitting cycle now. At the same time, it's also doing exploration work, infill drilling to upgrade the resource. They lost half of their antimony resource when they shifted from a PEA to a pre-feasibility study because of the more rigorous reporting standards. They know the antimony's there. They're doing the infill drilling to beef it up. And of course, this project is it's in a very large gold system whose limits have not been delineated. So it only has a 12-year mine life that will produce 4 million ounces of gold, but there are very likely multiples of that amount of gold present in this system.
The stock responded negatively to the Forest Service green light news and jumped during the last trading days of the year while gold was still looking like it wanted to break down to below $1,100. That doesn't really make sense. Is it possible one of the gold producers has finally become serious about taking a run at Midas Gold?
That is a distinct possibility, though I have heard no rumors to that effect. An alternative explanation is that in mid-December, when the gold bugs were all feeling sorry for themselves because interest rates had gone up, the U.S. dollar was, rocketing higher against other currencies, and of course, gold had reacted counterintuitively to the Trump election in November. That made no sense given all the anti-globalization policies promised by Trump and his ignorance about foreign affairs and the potential for geopolitical conflicts and so on. But the alternative explanation is that some distressed seller needed to get rid of their Midas Gold position, and it happened to coincide middle of December, right after this encouraging news saying, go ahead, start working on your environmental impact statement. Just when this positive news came out, and the gold bugs were all sitting back, not really in the mood to buy anything. Out comes the stock. Midas drops from 90 cents plus down to 65 cents or so. Not a huge amount of volume, but by December 27th, tax loss selling or the need to liquidate, get this stuff off the books is gone, and all of a sudden, boom, the stock bounces back to where it was. And of course, now it's tracking on the upside, gold's jump in the new year as people get this business behind them that the Trump election is not going to be positive for gold. So we now have a whole new situation. Maybe there's a producer in the background thinking of getting serious, but it could just as easily have been forced selling by an institutional shareholder in mid-December.
John, we talked about antimony, but isn't China also the source of several other so-called rare earths? And doesn't that leave North America and Europe very vulnerable because they control that kind of supply?
I think it is a very important topic right now, the world's reliance on China for a number of metals. Tungsten is one of them, rare earths. China still dominates rare earths. And in fact, rare earths continue to make new lows. The rare earth prices are at the levels that they were in early 2009, right after the 2008 crash. Mines like Mountain Pass have been shut down. They crashed and burned before they could ever really get into serious production. So there is this extraordinary vulnerability to metals where China produces 75% or more of those metals. Graphite is another metal in that category. Magnesium is another metal in that category. And then there's ones like zinc, where China supplies only 40%, but it comes from many small, very polluting deposits. So there is the geopolitical supply disruption risk with these metals, but there's also another trend not talked about so much, which is China's environmental awakening. Whereas here we hear talk that Donald Trump wants to shut down the Environmental Protection Agency. In China, they want to beef it up, get it teeth, get rid of the corruption at the local level, which allows mines and factories to pollute the air and the water. And as this starts to kick in, you will see mine supply out of China decline. So all this stuff coming together, it's actually a good situation for juniors which are sitting on projects with some of these metals, like outside the precious metal sector, which come primarily from China and from Russia. And incidentally, the second largest supplier of antimony is Russia. So with all the potential conflict coming from Russia, antimony definitely is one of the metals that is going to be, I think, a problem for the world.
Discovery Watch with John Kaiser will be back right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back to Discovery Watch. We're chatting with John Kaiser. With gold perking up in January as the world wonders if Donald Trump will become presidential after he's inaugurated, is there bound to be a bigger interest in hybrid gold juniors, which have an existing gold resource that needs a higher gold price to be worth developing, but which are also engaged in discovery exploration within that gold system? Do you have a new Discovery Watch Junior which offers both gold optionality and discovery potential?
Nighthawk Gold Corp and its Colomont Gold Project in the Northwest Territories fits that bill. This was a project that was put into production in the 80s and then shut down due to depletion and weak gold prices. In 2011, a junior acquired this project with a promise to clean up some of the environmental liabilities associated with the project. It consolidated a very large land position, 90,000 hectares, representing about the almost 90% of the Indian Lake gold belt. And there's a number of different styles of deposits there. There's iron formation gold deposits in there. There are the Colomac, Mafic sill-hosted gold deposits, and there are also some lode gold systems present in this. Now, this company sort of crashed and burned. It has a couple million ounces of 1.5 gram gold, open pittable, and that's, of course, the optionality story. If gold is high enough, this could probably be developed as an open pit. But last year, there was a rethink done about this project. Michael Byron, who is now the CEO, developed the idea that there's a lot of similarity between the mafic sills in the Indian Lake Greenstone Belt and the Kalgoorlie district, where there's a 10-kilometer system that has produced over 50 million ounces of gold from very high-grade sources. So the new strategy is to look at the various structures, the Colomac structure, the other structures in this property, and start drilling it for high-grade zones with the eye to developing them possibly as underground mines, maybe open pit mining the near surface portion. So last year they had a systematic exploration program underway where they're trying to sort out the controls, find these higher grade chutes, and develop these as a series of high grade zones. You put together enough of them, and you reestablish a central milling facility, and then you have a high-grade gold mine emerging. So this project is a Discovery Watch candidate because there is this goal of finding these higher-grade zones, figuring out the similarities, say, to Kalgoorlie system, perhaps establishing that this district has tens of millions of ounce gold potential. And of course, if they do not if they do not succeed in stitching this all together, there is still the possibility that if gold goes to $2,000 an ounce, then the existing resource becomes worth developing as an open pit mine.
John, I hope you and your family will have the best of New Year's.
I hope this year works out well for everybody. Thanks, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.